Hello and welcome. Companies around us are making great returns over their investment. Now, the question is, how can we actually take a benefit of that? The good news is we can also join these companies by investing our money in them. By purchasing the shares of these companies. But the million-dollar question is, which company is the best for our investment? Well, choosing the best investment requires an analysis of company's past performance and an analysis of profitability, liquidity, solvency, and risk management. This course is designed to teach you financial analysis of a company in all these different parameters, taking you right from the scratch where no knowledge of accounting finance is required. We will take you gradually to build your knowledge of financial analysis step by step. Starting with the parameters which are most reflective of the company's performance, like dividend or share price, we will drill down step by step to all the key indicators of financial performance. Financial statements, horizontal analysis, vertical analysis, and ratios. Everything is covered in this course. And yes, the course has a practical touch, as all the data used in this course is for Microsoft Corporation, the world's second largest company. And the best part is, this course comes with a 30 days money back guarantee. So for whatever reason, if you are not satisfied with the course, you can take the full refund. So sign up now and see you in the class. Hello and welcome to the course. Before we start, I would like to make few quick housekeeping announcements. First of all, this course has subtitles in English which can be turned on or turned off by clicking here. The good news is these subtitles are 100% correct and they are going to be very useful to you. Secondly, if you feel like I'm speaking very fast or very slow, you can adjust the speed of my speech from here. After that, if your video quality gets blurred at any time, your internet connection may have changed the video quality settings. But please rest assured, all the videos in this course are recorded in HD quality, and all you have to do is that you have to make sure that you have selected here 720p. So if your video quality gets blurred at any time, just make sure you click here and you make it back to 720p. You can make your screen into the full screen by clicking here, or you can get back by clicking here. You can ask any questions right within the Udemy platform and I will answer that to you usually within 12 hours. And one more thing that I would like to mention is that to get the course certificate, you need to complete all the lectures, and once a lecture is completed, it will be marked as completed as a tick sign here. So once you have completed all the lectures, your certificate option will appear here, and if you don't see the certificate option appearing, you can contact Udemy support team for that. Let's dive in. Okay, so the first question is, who owns a company? Well, unlike a motor vehicle or a house, a company is owned by thousands or millions of people. And so the way the ownership is structured, the way the ownership is defined is a bit different. In the case of a property, the ownership is represented by a file, and the name of the owner is mentioned in that particular file. But in case of a company, the ownership is represented by shares. And what does that mean? Let me explain. When a company will be receiving money, the ownership capital from investors, it has to issue them shares, which means that if as a business I am receiving the ownership capital from thousands of people, I will be giving them shares against their investment, and more the money I receive from someone, I have to issue them more shares. And what does that mean? The total shares issued by a company represents the total ownership of the business, and whoever owns those shares becomes the proportionate owner of that company. Let me give you an example. Let us say a company has issued 1 million shares, and out of those 1 million, 2 lakh shares are owned by you. So you will be called 20% owner of that company. So what is the benefit of doing that? The biggest benefit is that as an investor, you can sell your shares any date you want to an investor. So if I as an investor wants to purchase the shares from you, you can sell those shares to me, and maybe you can sell all the shares, all the 200,000 shares, or you can sell me only 50,000 shares, in which case I will become the owner of 5% of the company, and you will then remain the owner of 15% shares of the company. Now there is one important note that we should know, and that is, to be able to control the company, to be able to influence the decisions of the company, you must have control over 50% shares of the company. Well, maybe you can own more than 50%, or maybe you own some percentage, but there are other investors who have given the voting rights to you, and then you have control over more than 50%. But to be able to influence the decisions of the company, you have to have control over 50% shares. And in the next lecture, we are going to discuss share structure and market value of Microsoft. Alright, so in this lecture, we are going to discuss share structure and market value of Microsoft. So the first question that I would like to answer is, who owns Microsoft? Well, if you are thinking this man, Bill Gates, owns Microsoft, the answer is no. Bill Gates do not own Microsoft. As at March 13, 2020, Bill Gates only owns 1.36% shares of Microsoft. So ownership of Microsoft is split over 7,583,000,000 shares. And anyone who buys the shares of Microsoft becomes the proportionate owner of that. And if I look at the share price today is 20th of September, so I will be taking a look at 18th September, the last working day of the week, and the share price, the closing share price for the day was 200.39. So you can see that share price opened at 202.8, and then it was trading at the highest of 203.65 and lowest of 1.96 shares, and a total of 55,208,271 shares were traded from investors to other investors, and the closing price of the share was 200.39. So if I have to calculate the total market value of Microsoft considering 7,583,000,000 shares at 200.39, the total market value will be 1,519,557,370,000, or I can simply say $1.5 trillion. Well, I must mention one more thing, and that is the total market value of the company is also called market capitalization, or in short, market cap. Up next, shareholders get from a company. So if you purchase shares of a company like Microsoft, what benefit will you get from that? Okay, so what benefit shareholders get from a company? Or in other words, let us say you have purchased one share of Microsoft at $200. Now what benefits you can expect from the Microsoft? Can you expect the revenue or sales, whatever the company is making by selling their product? Can you expect the profits they make? Or can you expect a share in the property, plant, or equipment? The answer is none of these. You will not get any of these. The only benefit that shareholders will get is that companies only distribute a fraction of the profit. So let us say if Microsoft has made a profit of $150 billion, they will only decide to distribute a fraction of that, let us say $10 billion. And this distribution of profit is called dividend. So as a shareholder, the only benefit that you will get from the company will be the dividend that they distribute. Well, practically there is one more benefit, and that is the share price may increase. So the share that you just purchased for $200 at the beginning of the year may be trading at $210 at the end of the year. So you can sell this share to other investors and earn this 10 extra dollars, and this gain is called capital gain. So the increase in the share price is called capital gain. So what exactly a shareholder earns from a company? The first is dividend and the second benefit is capital gain, and these two combined together, dividend plus capital gain, is called total shareholder return. We are going to do an example of total shareholder return. Hello and welcome back. So in this lecture we are going to to calculate capital gain, dividend, and then total shareholder return for Microsoft. But before we start that, let me tell you a small thing, and that is this file that I'm using right here is available to you in the resources of this lecture. You can download it from there and practice along with me. And from where we have taken this data, all the data about financials of the company and share prices and dividend, I'm going to show you that later in this course. Right now you can just concentrate on the files that are given and you can follow along with me. So the first thing that we need to do to calculate capital gain is the share prices. And to calculate the capital gain for 1 year, we should have share prices at the beginning and at the end of the year. Now with the year, you must be considering that the year starts from 1st of January to any year and then it ends at 31st of December. But in the case of companies, a year can be any period of 12 months. So companies can choose to have their fiscal year, this is called fiscal year, as the calendar year that is ending at 30th of December, or they can choose any other period of 12 months as their fiscal year. So in the United States, most of the companies, in fact around the world, a lot of the companies will have the fiscal year ending at 30th of June. Okay, so here we have fiscal year of Microsoft for 20 and then 2019 and 18, 17 and 16. And what I have really given you is in this file is that we have given you the share prices at 30th of June at each year. So for the fiscal year 20, the ending share price, at 30th of June 20 is 203.51, and the starting share price for this year 30th of June 20 will be 1 year back, that is 30th of June 2019, and this will be 133.96. And if we can calculate the difference between the two, this minus this one, we can see what capital gain has been made in this particular year. So we are going to follow this financial year for the share prices as well, because all the other data that is available for Microsoft is available for the same fiscal year. So now that we know how to calculate the capital gain for a share for a year, what I'm going to do is that I'm just going to copy and paste this to all the cells below, and then you can see that Excel will automatically do the job for us, and we can calculate the capital gain for each year, fiscal year 2017 to 2020, and this is going to be called capital gain. Now that we know capital gain, the next thing that we need to know is that we should have dividend. And for dividend, let me go to the next sheet. So here we have dividend for each year, fiscal year 2020, that is 2.04, and then fiscal year 2019, that is 1.84. And if you really like to see the breakdown of that in what installments this dividend was paid, you can click on this plus sign here, and then you can see that what exact amount of dividend was paid in each period in fiscal year 2020, and similarly you can check for fiscal year 2019 as well. But we don't really need that for now, so I will simply go back to the top level of the year, and the fiscal year 2020 has a dividend of 2.04, and so on, you can see downwards. Now that we know capital gain and shareholder return, let's go to our third sheet, which says total shareholder return, which I have already compiled together the share prices and dividend information for fiscal year 20 to 17. And let me just quickly calculate the capital gain again. Okay, so capital gain is the difference between share prices, that is this minus this one, and I will just copy and paste this to all the cells below. And now you know that we have capital gain as well as dividend, and total shareholder return is basically the sum of these two. So what I'm going to say is that for the total shareholder return, I'm going to sum dividend plus capital gain, and if you can sum for all of these 4 years, you can see that we now have total shareholder return for fiscal year 20 to 2017, all 4 years. And one last thing that we need to know is that we need to find out total shareholder return in the percentage. So for that, I will just add one more column, and I would say total shareholder return in percentage, that is basically this total return divided by share price. Now this is important. Which share price should we use? The share price at the end of the year or share price at the beginning of the year? In all of the ratios that we are going to do in this course, we will be using the share price at the end of the year, but because that is the share price that is used everywhere for the calculation of ratios. But in this particular area where we are going to find shareholder return. The concept is very clear. The investment was made by the shareholder at the beginning of the year, so we should be considering the share price at the beginning of the year. So I'm going to use the share price at the beginning, and I will just press enter now, and for the purpose of percent I will just press the percentage sign, and here you can see that we have 53% return in fiscal year 2020. So Microsoft shareholders have made a 53% return over their investment in fiscal year 20, and that is definitely an amazing return, considering that if you deposit your money into the bank in United States, you can hardly really earn 1.2%. So this return seems very smart, but now you must be considering that, you must be thinking that we must be comparing these return with other companies, that what if we had invested this money into other companies, how much return we could have made. Well, that is absolutely right, you can consider that. But one comparison that we can make, a very good comparison that we can make, is Microsoft versus Microsoft in the previous years. So what we can do is that we can simply copy and paste this formula to all four cells, and you can see that Excel has calculated the shareholder return for Microsoft in all the previous 4 years as well. And you can see that in year 2020, Microsoft has done a way better job than in previous years, and the shareholders must be very happy as long as we are considering Microsoft versus its previous years. So that is how we calculate total shareholder return, and I hope that is making sense.